Apple shining in the second quarter. The technology titan reporting strong gains in profit and revenue last night. The company also unveiled a record $100 billion buyback plan. And while iPhone sales only climbed 3% year over year, the average selling price crossed the $700 mark because of the premium price tag on the iPhone 10. It's $1,000. Joining us right now to talk more about it is LJH investment advisor Larry Haverty. Larry, good to see you. Thanks so much for joining us.
Hi, Maria.
Apple's one of your top holdings, right?
Absolutely.
And you thought about the report? What? Tell us how would you characterize?
Oh, I think it's terrific. I think the stock goes up. I think there are two dominant characteristics in the report, Maria. The first is China. And when you get to over $700 billion in market cap, you need to get China right. And I think the rule in China is pretty simple. Nothing happens in China without the government wanting it to happen. So you had the basic business go up. It was up, I think, in the neighborhood of 21%. And that was the sharp acceleration. So that's very encouraging. But I thought the little snippet in the call that now Apple Pay is being used in the Beijing and Shanghai transit systems indicates that the government is really welcoming Apple and that they're really working together. And this may reflect the better relationships between Xi and President Trump, because Tim Cook has been visiting the White House, as you know. So China, I think, is very, very important for Apple, and the signs are encouraging.
That's interesting.
The second thing is sticky. And basically, you want, as an investor, for the company to migrate from hardware to basically services and retailing. You want to move the business model to recurring revenue, because it's every quarter it's very, very hard for the company to beat Wall Street's targets for the units on the smartphones. And what's happening here is the smartphone, I think you have to look at it as a platform, and you never know what's going to happen on the platform. And you have this development community, and they're doing wonderful things. And this services business is growing at 30%. It has very, very high incremental margins. So the quality of Apple earnings is improving every day.
Yeah.
The multiples well below a typical consumer product company like Colgate or Procter & Gamble. The growth is better. The brand value is equivalent or better. So what's not to like? It's a free cash flow machine. The share repurchases here are very accretive, so they pass muster from the finance professors, I believe. So I find it really hard to see anything terribly difficult here. I think the stock is going to be terrific the next 6-12 months.
Larry, it's Dagan McDowell. You mentioned the services business. Important to have that recurring revenue stream. The revenue there grew by nearly a third of 1%, accelerating from the previous quarter. Services includes iTunes, Apple Music, the App Store, iCloud, and Apple Pay. How does Apple continue to grow at such a good clip, that business? What services do you expect, or add-ons to this division, do you think you'll see from Apple specifically?
Well, I think you get more people into the system. And you go into the shopping mall. I don't think it's too terribly difficult, and I would tell you to go into any one. And the busiest store in the mall is the Apple Store. So people are walking in there, and they're wandering into the ecosystem. And once they're in the ecosystem, they stay in there. So you get more people, and then you have this very vibrant developer community that's finding clever things to do with the phones. I mean, who would ever think 10 years ago that you could be paying tolls on a subway with a phone? I mean, it would have been right out of a science fiction novel. Now it's happening throughout the world, and I don't think anyone can predict what's going to happen next. And people are using these devices more. You see it with Facebook. The time on the devices is growing very, very rapidly. Then there's just a number of companies, cellular tower companies, for instance, that are benefiting from this ecosystem that's expanding. And each day it gives the consumer more reason to join. And if you looked at Apple as a car company, not only are they joining, but they're trading up. They're buying Cadillacs. The average selling price went up into solid double digits.
But there have been a lot of negatives about that iPhone.
Larry, let's touch base on a couple points that you brought up. And I think one of the most salient points is that you're talking about Apple Pay, right? And you're talking about the subway system. But if you go over to China, Apple is the #4 device over there. They already have Xiaomi, which is a cell phone company that people love over there. People use WeChat to pay for things. I mean, Apple is so far behind. They released Apple Pay years ago here, and it still hasn't dethroned the PayPals of the world and every other sort of payment app. And so if you start to look about where is their growth, why are they getting a 15% multiple when the market is trading at a higher multiple? And I think one of the things you can look at is that they're just not innovating, right? You brought up how if you look at Apple as a car company, it's a Cadillac. Well, Apple was talking about doing cars. We haven't seen anything on that front. They haven't innovated on the TV front. They're not really taking the forefront. You see Amazon come out with the Echo. They're the #1 in virtual assistants with the Dot. So I don't understand how I would want to put money to work in Apple here when Apple's not even putting their own money to work. They're just giving it back to shareholders. They're not doing big acquisitions to grow. I just can't get excited about this stock anymore, given the fact that over 80% of devices out there are Android.
Well, I think you either look at it as the glass half empty or the glass half full. And I think all of what you're saying is factual. But China, as you know, has much lower income levels than the United States. And Apple's at the high end of the market. And I'll tell you, Apple never has a sale. And if I've been a retail analyst for 45 years. If you can find a retailer that never has a sale, that's a pretty amazing
yeah, they don't have a sale, but they had to come out with a new phone, the SE, which is at a lower price point. So they actually had to address this market because people weren't buying their phones.
Well, you look at the whole thing, and the revenue in the quarter, I think, went up $9 billion. That more or less implies $40 billion of incremental revenue. So one way or another, they're collecting tolls, and the way they're collecting tolls for people like myself who like cash flow, they're collecting tolls so that more of the dollars are being translated into profit. And you have a business that doesn't require capital to grow. That's another reason for owning it. I used to follow the paper industry, and they generate $1 of sales, and they had to spend $2 of capital to do it. This company, it's the exact reverse, and that's the kind of company that you want to be an owner of. And you know, meanwhile, the stock is very undervalued relative to the business quality, and they're seriously reducing the shares. The share count's down now $1.5 billion. So not only is the company much bigger, but the share ownership is much higher proportionally because there are less shares outstanding. They're not watering the stock like a lot of companies do.
Yeah, it's interesting, and the valuation is definitely more attractive than a lot of other tech